Lifespace Developers Limited Q2FY24 earnings conference call. On the call, we have with us today Mr. Amit Sinha, MD and CEO, Mr. Vimal Agarwal, CFO, and Mr. Ravindra Basu, Head of Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Sinha, MD and CEO, Mahindra Lifespace Developers Limited. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and welcome to our Q2 financial year 2024 earnings call. At the outset, I would like to welcome everybody for the call and thank everyone for participating. Also, my best wishes for Dasra and Diwali. Also, best wishes to India for the World Cup for all our collective behalf. Let me cover a few things very quickly. I'll cover a few highlights that we are seeing in the industry overall. We'll quickly cover pre-sales on the resi side. The launches that we have done are in the process of gearing ourselves for the H2, the highlights of business development, the update on the ICIC side, and I'll then request Vimal to jump in for the financials bit. So those are the few topics that I'll quickly cover along with Vimal. So let me just start with industry very quickly. We continue to see a huge amount of momentum in the real estate industry. I would call it a purple patch for the industry, given multiple strong drivers in the market. The macros are strong. The GDP growth is contributing significantly. The per capita income, the per household income, etc., are driving the growth. Post-COVID, we have seen a significant interest in home buying. Not only in buying home, but also buying larger homes. Upgrades are also becoming a key part of the buying behavior. Typically, the industry, real estate industry, has 6 to 8 year cycle. We finished 2 years into it, entering the third year, so it has many years to go. We continue to see steady demand growth across the markets. One of the interesting things that we track on a monthly basis, the inventory overhang across each of the key markets, and that continues to reduce. That's very interesting because this year is going to be a strong year. We'll probably cross 5 lakh, maybe even more 550,000 units. But the inventory overhang continues to come down, which is healthy for the industry. Just as a comparison, China in the best years had 1 crore homes, so 20 times more homes were sold in China as a reference. So we have a huge amount of headroom to grow as a country, as a real estate industry. Typically, the industry contribution is 12 to 14% in more developed markets. India's contribution from real estate industry is roughly 7 to 8%. So we expect that contribution to go up significantly. And the expectation from many sources is that from $260 billion industry that it is today, primarily residential, will become a $1 trillion industry by 2030. Just for reference, China was $500 odd billion in 2009. China was $2 trillion in 2019, and there has been a lot of challenges with Evergrande and Country Garden since then. But it shows you the kind of size that you can expect in a country of China's size or India's size. So huge headroom for growth. We also see a lot of flight to quality that signifies that branded players, listed players like us would benefit from the governance thresholds that have been put in place, the regulatory improvements, statutory norms that have been put in place. We'll continue to leverage that to our advantage. So the flight to quality is a key part of how the industry is shaping. So that's one quick first point on the industry. Coming to Mahindra Lifespace, on the sales side, especially on the residential side, We have achieved a quarterly pre-sale of 455 crores versus last quarter to 399 crores. So some improvement there. On a half-yearly basis, we stood at 800 crores for the first half of this year. Compared to H1, H1 last year was 1,000 odd crores. Important point to note here is that our H1 2024 sustainable sales contributed more than 80% of this 800 crore versus last year H1 sales, where we had reported pre-sales of 1,001 crore, with almost 80% coming from new launches. So the mix of sale is very different in this first half of this year. And this fundamentally reaffirms the fact that strong brand coupled with solid on-ground distribution and deeper relations with channel partners will keep us in good shape as we get in H2 with a series of new launches planned. I had in the last call I promised 9 launches. We have done one in quarter one in quarter two, and then just in this month, October month, we've done the third launch. But we have a series of launches planned later in the year. I'll touch upon them. But as I mentioned earlier, having a strong engine, distribution channel partner and the brand allows us to capture not only sustainable sales but also the sales that come as a result of new launches. So strong pipeline in plan. Let me touch upon the part 3, which is the launches. As I mentioned, our first plotted redevelopment or plotted development was launched at the end of quarter 1 in Chennai. We had never done a horizontal development before. We received a phenomenal response. It was launched at the end of June, so most of the impact was only seen in quarter 2 of this financial year. We sold 85% of our inventory in the first 3 months, 244 plots out of 282. At the end of Q2, we launched phase 3 of our Happiness Authority project in Pune. We are seeing very strong momentum. I'll share more details in subsequent calls. We will see a fairly busy H2 in terms of launches. Some of the launches were delayed because of statutory and regulatory requirements, some Supreme Court rulings about the RG area on Mother Earth, etc. So they have deferred, but we'll expect code name Malgudi in Bangalore very soon. Province in Kandivali, Happiness Kalyan to phase 2, Happiness Palghar to phase 2.2, and code name Navy, which is a redevelopment project. And then we might have a delay in one of the other redevelopment, but to make it up, we are fast track 2 or 3 of other projects so that what we have committed to you now in terms of launches, 9 launches this financial year, we should be able to achieve that without any problem. We also just last week did an industry first launch of our a very exciting project that you know of, Citadel phase 2 was launched through Metaverse with very exciting new technology trends through 500 drones that lit up the sky with a lot of exciting ways to understand the market, understand the customers, and create a pull factor from the customers. It's been very well received by channel partners and customers alike. So we hope to see more such exciting things to come from MLDL in future launches as well. Let me cover the next part, which is part 4, business development. Continue our business development effort. We continue to maintain a very healthy BD pipeline of 5,000 to 6,000 crore. Just to highlight a point around the Navy redevelopment project, we had acquired the project in April of this year. We got all the documents in our hands end of April. But as of last Friday, the development agreement has been signed by 170 flat owners. 135 plus registration was done on Friday itself. This is one of the fastest redevelopment bring to market effort that I've seen, and we are very thankful to the society members who also showed the speed that we want to demonstrate from our side, and we hope to bring this to market in this financial year itself. financial year itself. We also want to highlight one of the acquisition that we did. It didn't happen exactly in quarter 2 or H2. It happened 12 days later. We acquired a land parcel, 5.4 acres in Wagholi, Pune, which has a development potential of 1.5 million square foot saleable area. Pune continues to be a strong market for us, and this acquisition gives us the opportunity to leverage our brand in the micro market that we were not present. So this will allow us to participate on the eastern side of the Pune city area. We will see the launch of the same project in the next 4 to 6 weeks. That's the speed we want to have for as many of our launches as much as possible. As we go forward, the pipeline looks very strong. Our much awaited Thane land has seen a phenomenal boost in development potential, which I touched upon in the last call. We are in the process of getting a set of approvals that allows to get us ready for a launch likely next financial year. So that's on the business development side. Let me also quickly cover the final part from my side, IC and IC business update. IC, as you know, is a lumpy business. We had as anticipated, we had a very strong H2 of last financial year, and H1 of this was a little bit subdued because it's lumpy, it comes in waves, but we are seeing strong amount of domestic consumption driven manufacturing, China plus one related opportunities. So we see strong momentum. In fact, we have a healthy pipeline of LOIs, which we are in the process of converting slowly and steadily across all our world cities and origins industrial clusters. A few approvals are awaited so that we can close those LOIs into the lease opportunities. We'll keep you updated. Most of that will happen in H2. I'm hoping that when we talk next, you'll get to hear the momentum, although lumpy in the IC business, is getting converted into real opportunity that we'll be able to see in the numbers that we put out. So that's on the IC side. Let me hand over to Vimal for the sixth part, which is the financial part.
Thanks, Amit, and good morning, everyone. As you all know, many of our key operating entities from residential side and IC side are not consolidated on a line-on-line basis. Moving on to the key numbers here. The consolidated total income stood at 25.7 crore as against 73.8 crores in Q2FY23. The consolidated PAT after non-controlling interest stood at a loss of 19 crore as against a loss of 7.7 crore in Q2F23. The company has a debt of 291 crore at consolidated level, while cash in hand and bank balance, including investments, is at 65 crores. The cost of debt stood at 8.1% on consolidated basis. Our net operating cash flow without land-related outflows was 249 crores in H1, reflecting the strong collections in the residential and IC part of our business. These are few of the key points. I now request if the floor can be open for questions from the participants, please. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, good morning, everyone. So just to start off on the launches, whatever launches we have planned for second half, could you give us some quantification? What is the overall GDV of the cumulative GDV of the launches you are planning? And just to clarify, the redevelopment is on the Santa Cruz project, right, which you touched upon, where the signing has happened. Yeah, that's the first question.
So let me thanks, Abhidev. I think let me clarify the second part quickly. the signing has happened for the Navy colony in Malad. So where Santa Cruz is actually, we are working on it. It's two different societies, so amalgamation, the process is slightly longer. So we are still trying to accelerate that, but it is taking more time than we anticipated. But the Navy part is done. Navy was announced in April, and we have done the registration as of last Friday. So hopefully that answers your second part of the question. And coming back to your first part of the question, I think the GDV. So we had initially planned 9 launches. We have potentially 2 of those launches may spill over to FY25, and one of them we just talked about, Santa Cruz, might just given the time it's taking to get the process done. But we have 3 additional projects that we've added to this year's pipeline itself, so that we should hopefully be able to not only meet 9, but hopefully do more than 9 as part of our launches this year. The total GDV from this that we are bringing into the market, so let me just clarify, like province will have a 2,500 odd GDV, but we're only bringing the phase 1 of that launch in this financial year. Next phase 2 will be in the next financial year. So if I add up all the phases that we have planned, so not the whole project, in this financial year, it will be between 2,500 to 3,500 crores in GDV for this financial year based on the launches.
Okay, 2,500 to 3,500 crores. And sir, Kandivali, when do we see the launch happening? It will be within this quarter, or it is towards next quarter?
This will likely get to in the next quarter. Given we also want to time it and make sure the market is also prepared well. So we are awaiting the approvals, and as you know, we had to redo a lot of things given some of the changes that happened. Most of things are going in the right direction. Even though we might get approval this year, which we are hopeful, this quarter, we want some time to warm up the market. So my best guess is we want to do it in January rather than this quarter. I don't want to rush into it given it's such an important project for us.
Okay, and so just the 2 redevelopment projects, so Malad may be launched this year itself and Santa Cruz next year, right? To understand correctly?
Yes. Yeah. Maybe we are pushing to launch this year. Western also we're trying to, we're not given hope. So we are pushing hard, but just knowing the process, it might spill into next financial year.
Okay, but this 2,500 to 3,500 is a conservative guidance you are giving, right? Factoring in any delays, or this is the, lower end, upper end? How do we should we look at it? Sorry to press on.
This is a best guess that we have based on the launches we have. 2,500 is on. It's a good. Like last year we did 1,812 just for reference, right? So
okay. Sure.
Here we have 2,500 guidance, right? So I think, but launches versus sales conversion, there is a ratio which we'll know depending on the success of the project.
Sure. Fine, sir. I'll come back in the queue with more questions. Yeah, all the best.
Thank you, Abhijit.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Pritesh Seth from Motilal Oswal. Please go ahead.
Thanks for the opportunity. Firstly, on business development, so you mentioned about 5,000 to 6,000 crore of pipeline, and I think as per the plans that the company is having of 5x growth in 5 years, I think every year we should be doing around 6,000 odd crore of business development. So how is it looking for this year? We have already signed up 1 project in Pune, but in second half, will this traction be more positive, and will we be achieving this 5,000-6,000 crore of BD this year?
Yeah. So thanks, Pritesh. I think just want to clarify one thing before I specifically answer the question. This 5,000 to 6,000, as I explained in the last call, also excludes Thane. So we had not included Thane, which has huge potential, but we will target on a fraction of the full FSI potential, given it's a beautiful site. It has a lot of trees and greenery that we want to preserve. So we had talked about 8,000 crore just from Thane, 50% residential, 50% commercial. So that is not included in the number that you just mentioned, that I mentioned earlier. We since I came over, I think we put a huge amount of effort in the BD process completely, given where the market is. So a lot of discipline, a lot of efforts and outreach to get to see as many deals that are there in the market. It's good that we are focused on MMR, Pune and Bengaluru, so it allows us to understand the market sentiments and how the markets are shaping up really well. But I just want to be, so we are on track in terms of the volume and the flow of deals that we are seeing. But I'm also very careful about signing the deals that only make sense to us, because as you know, the market is so hot, the expectation of landowners in terms of pricing is very different. So I don't want to sign up a deal and then have the winner's curse say, I got the deal, but when I'm bringing them to the market a year or 2 years later, there is slowdown unanticipated. So just being very careful and disciplined about how we triage through the deals, how we filter through the deal economics and make sure that we sign the right deal that makes most sense for us in achieving our aspirations. So 3 points. One is the Thane part was not included. Second, we see enough flow and of the deals across these 3 markets that allows us to triage through. And third is I want to be very careful on the deals in terms of economics so that we don't sign a deal that will cause winner's curse.
Sure. And beyond the Thane, Kandivali like deals, which are large in size, you would be happy to get these above 5,000 to 8,000 crore kind of deals, additionally, or for now, since you have Thane and Kandivali in place, those large size deals are largely out of our contention right now. What's the strategy there?
Yeah, so we have a good flow of large deals, medium-sized deals. We call it mega deals, and the Thane is a mega deal for us. We have category A, category B, and category C. And given the market, we look for all kinds of deals that meet our threshold. So we don't want to do too many small deals, and then we also don't want to be chasing deals that may not have the economic threshold that we are seeking. So we're always trying to balance that. So as part of that, we will be open to all kinds of deals as long as they make our economics and thresholds work.
Sure, got it. Just since you touched upon Thane, and you mentioned about that project being ready for launch next year, but has there been any clarification on how that 50-50 component is going to get developed? I mean, whether it is supposed to be delivered together or whether it is supposed to start together. Any clarification on that?
Yeah. So
and also you can touch upon the ISER project as well. If how is the status of approvals there?
Yeah, got it. So let me cover Thane first. I think a great question actually. That's something we have to carefully plan for. The way the law tells us is that you can sell and construct asynchronously, so they can happen at any point of time. But the OC part has to be joined together. So I cannot deliver a single square foot of residential till I have delivered equivalent square foot of commercial as part of the IITT policy. So even though I can sell earlier, but I have to make sure that they get delivered. And typically the commercial has a shorter construction, 2 years versus 4 years for resi. We have to plan for that very carefully. And that's why I think, as I mentioned, we are not only getting some approvals to make sure that we are fully ready, but also we have commercial point of view. We are thoughtful about working smartly with this constraint in mind. I don't want to start something on resi till I have some clarity on commercial, at least part of it. We will do it in phases so that we are not locked in a situation where our resi is ready, but we can't offer possession to our customers. So that's on the Thane piece. So that's part one. I think on part two, on the Dahisar, we have not seen any major improvement in the clearances that were required for us to launch the project. And that's why in the next 30-60 days, we'll take a decision whether we want to be whether we want to consider including the Dahisar or we want to drop it from our pipeline and see when it's ready and look at other projects also that may be more exciting from a timeline point of view. That may not require this kind of specific approval.
Got it. Very clear. And just one last on IC and IC. So I saw some 70-acre decrease in SEZ piece in the Jaipur part. That the size of that land has reduced. Any reason for that?
Just say that question again. I think I lost the last part of your question.
Sure. So, yeah, Jaipur was last quarter 2,000 odd acres, somewhere around that. Now it is showing as 1,900 acres. And I saw, in terms of the SEZ part of that land, that has reduced by 70 acres. So, any specific reason for that reduction?
Yeah, I think so let me highlight two things. We have to always abide by the government rules. So there is some tweaks that are happening from 65% or 67% to 65% in terms of how much is leasable compared to the gross area. So there is some adjustment that we always do based on the latest and the greatest guidance that we get from the government. And then we have some healthy SEZ pipeline also that we are tracking well. We are also looking for some denotification that will allow us to. There is more demand on the DTS side compared to SEZ, but we'll have to get the right approval before we can talk with a lot of confidence. And as you know, the DESH bill will also hopefully help us, not only help us, but any SEZ entity to benefit from if that comes into. So we are working with the government, all the industry bodies to explain how this should be done, which is equitable for all the stakeholders involved.
Sure, got it. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Himanshu Upadhyay from O3 Portfolio Management Service. Please go ahead.
Yeah, hi. Good morning. My first question was, you have stated that the real estate market cycle is now in the third year of upmove. Okay. We are seeing prices of residential flats, etc., move up, or the end product. Okay. And also the price of land has been increasing. How are the basic assumptions like realization, saleable area, and costs, which are also increasing because of inflation, changed in the assumptions what we are making for the projects or we are bidding for? Okay. Can you elaborate on that, and what does it mean for you? Are we still in the spot that the end realizations are much ahead of the land prices and costs, or you think the fine balance is moving on the other way? Some idea in all the three markets where we are focusing on. Okay.
Vimal, you want to jump in?
Yeah. So Himanshu, a couple of points from my side. One is so far as the realizations are concerned, as you mentioned in the last call, we see a lot of discipline, although the trajectory is upwards, but it's not sort of obscene price increases which we are experiencing, but it's in the positive sort of trajectory. Land, yes, continues to be something which is a critical raw material for us, and there is some hardening of pricing which we are experiencing. At the same time, sort of middle of the P&L cost lines which are there, last 1.5 years has been much better than what we saw post-pandemic. And to that extent, from, say, our guardrails perspective, we are looking fairly strong across all projects which we are signing up for or the projects which are coming up for launches. Right, Amit?
Just very well. Sumanshu, let me just add two more things. And there are many more things, and maybe we can explain more in detail when we have more time. But I think there are a few things that we are trying to do at our end. First is the size of the project. I think it's I think Pritesh, your question was one of the questions earlier. We should have the optimal mix of projects, and ideally the size of the project should go up. So from a scale point of view, if you're doing a 500 crore project, we should ideally go to 1,000 crore project and 1,500 crore project. When you do scale projects, automatically you have the ability to leverage a lot of common overhead, fixed costs, etc. And that's something that we are consciously doing across all the three markets. And I have clear thresholds of what is the right project looks like. If it is smaller than that, then there has to be a very strong strategic reason. Otherwise, we should not do it, because economically it will put some of the constraints that you just touched upon. So that's one. And then the second part on the cost side, I think the volatility is a challenge in our business, because our price gets locked in upfront and cost we have to endure for the 4 years before we deliver. So it's extremely important for us to manage our cost of construction really smartly. And one of the things that we have seen, and we are trying to bring the manufacturing mindset into our project mindset, project operation, is how do we do the standardization? So standardization of, let's say, apartment sizes, standardization of building layouts, standardization of MEP, standardization of parking lot, standardization of components, standardization of all the finishes. And these are things that are typically seen at a very high level of sophistication in, let's say, manufacturing industry. In projects, everything becomes bespoke and it's not industrialized at all. So with the help of my colleagues, especially Jitesh and Viral, Jitesh leads design and Viral runs marketing, we are saying that how do we standardize our product so much so that it allows us the efficiencies in the constructed area to the RNA area that you don't want to construct too much for the same amount of RNA, which is where the selling happens. So these two things I just want to add to what Vimal said, to make sure that we are able to, one, on the size of the project, we are increasingly trying to take it up. And then the biggest driver of profitability is the ratio of RNA versus construction area. How do we standardize and reduce and get the efficiencies on the cost side?
Thanks for the detailed reply. It was very helpful. Second thing was on, it is slightly longer question. Can you give an idea of how is the capital allocation strategy evolving? Because in our presentation on the ambitious goal slide, we have stated that we are working on a lot of 6-7 factors, or the 6 factors. And what does it all mean? Okay? And how does the bold ambition that you are elaborating, does it mean on customer segments, products? And what are becoming down with experience more no-go areas for us? Or we would have seen that these are the things which we used to do in historically. But I think the return ratios do not meet for us. So that is one part on capital allocation. And secondly, how does the KRAs change and the organization structure or model change based on what you are trying to achieve? And or the bottom, how is this evolution impacting or positive development is happening, let's say, on the people front and capital allocation and their KRAs?
Yeah.
Just some thoughts on that will be helpful.
No, you've answered a great question. I'm glad you touched upon. I'll try to be brief here because it's a question that requires longer, more detailed answer. But let me just try to give a summary on both the points that you raised. The aspiration that we have set up requires a very healthy GDV to be created over the next 5 years, 4.5 years. So anything between 40 to 50,000 crore GDV needs to be there for to supporting our 8 to 10K scale up that we have. Now, the way to pursue this is very important that we don't do, and this will be spread across, let's say, Mumbai, Pune, as well as Bangalore. The size of the project I touched upon earlier will be different, like mega project, category A, category B, category C. But there's another important angle of the type of the deal. Is it a society redevelopment? Is it a joint development? Or is it an outright purchase that we have? Each of these things will have a different capital requirements. Because in case of, let's say, the Navy, we don't need to put capital till very late after the registration is done. You do a little bit of marketing spend, but now and then very quickly you can launch. But when you're doing outright land purchasing, you have to make sure that you spend all the money up front, and then it takes anywhere from 9 to 12 months to bring those projects into the market. So those are the ways we estimate the size of capital required to support our growth aspirations. But one of the fundamental principles that required for us to commit to any of these is the financial returns. So this is something that I have started to push internally, that whatever you do, Himanshu, what happens is there is always a dilution of some, from the cost point of view or some other reasons, or IRRs get diluted because of time as well as, let's say, cost overrun. So how do we actually make sure that we factor that in our financial analysis when we do the underwriting for the deal? And that's the capital allocation is based on the principle of what's the theoretical IRR, but also the realistic IRR when we finish the project. So we are very careful and now disciplined about keeping both these into account as we plan for the project. And that is non-negotiable, because it's critical that what we say at the time of underwriting and what we deliver at the time of possession and reflect on economics needs to be very close to each other. Now, to do that, the second part of the question is your KRA. In the past, we had a very functional organization. And in the last few months, we have started to change that. You'll see in our investor presentation, we have introduced the concept of Chief Business Officer for even our residential business. For IC, we had the Raj, who's our Chief Business Officer for industrial. But now we have Vimalendra Singh. He's the Chief Business Officer for residential, south, west and north. And we have Ashwin as the Chief Business Officer for south, especially Bangalore, and we have a lot of projects in Chennai, in our world city as well. This is critical, because then you have end-to-end accountability. What you say in underwriting and what you deliver, you have the full responsibility. And this is also required from a scale-up point of view, because now they can have a regional org structure that allows us to work towards scaling, let's say Mumbai or Pune or Bangalore specifically. And beyond these changes in the organization, we are also bringing people in to make sure that they are able to support our scale-up aspiration from a hands and legs perspective and the quality of support required. So I just wanted to keep it short. I'm happy to discuss in more detail, but this is how we're thinking about the capital allocation and how we're thinking about the KRAs and the organizational bandwidth required to support the scale-up.
Okay, thanks, sir. And one small thing. Origins Ahmedabad is taking a lot more time, than what was envisaged, Any specific thoughts you have, or what is the progress on that?
Himanshu said Ahmedabad, right? Origins Ahmedabad.
Yeah.
So, we talked about that we are ready to, so two of them. We are either looking for a large anchor customer. We don't want to do a small 1 acre, 2 acre deal. Or we also shared our aspiration to even exit that if you find the right buyer. The thing that I don't want to do, we want to do a fire sale. I think this land parcel is, I would say moderately attractive. It will become attractive in the next 3 to 5 years, given how the utilization of our land parcel around that, and even the competition from the government park. But I don't want to do a fire sale because this has value. And hopefully we'll find the right partner, right customer over the next few years. So that's we are open to get an anchor customer, largest, or exit completely for the right, but don't want to do a fire sale.
Okay. Thank you from my side.
Thank you. Participants, you may press star and one to ask questions. The next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So my first question is on Kandivali launch. So is it only the timing, which we are looking, or is it also dependent on some approvals, which might come in?
So I think we are waiting for the normal set of approvals. It's not a question of if, Shreyans, if you're trying to say if Kandivali will get launched, it's a question of when. And it's part of routine approval that we seek from all the relevant authorities. So that's going on. As soon as those are clear, including the RERA approval, then we can launch. And that seems we had to redesign our timelines a little bit given some of the changes that happened. But right now we are looking good on those revised timelines.
Got it. Sure. So secondly, in terms of the launches which you lined up, say 2,500, 3,000 odd crore GDV, and the way 1H has panned out, fair to assume we'll be crossing the 2,300, 2,400 pre-sales mark for this year?
I think Vimal, you want to. I think pre-sales number we have not given for this financial year. We have given for next financial year. 2,500 pre-sales from Resi and roughly 500 from the IC side. That's for the next F25. And I will stay in those guardrails to talk about what we have planned for next year. I will continue to update you on quarterly basis how our pipeline is looking forward, so you have a good comfort on how the business is scaling up.
Got it. Sure. And so lastly, as far as our BD of 5,000, 6,000 odd crores is concerned, can you break it in terms of Mumbai and specifically in terms of redevelopment?
Yeah. So let me just say, so typically, just a split wise, I'll give you overall split. My thumb rule is 60-20-20. 60% from Mumbai, 20% from Bangalore, and 20% from Pune.
Okay.
Now that's the typical. The redevelopment part is something that I'm constantly evaluating. They need to meet the guardrail that we have in terms of size, in terms of location, in terms of the number of members in the society, the kind of other commercial return that we can get from the fresh sales. All those are extremely important. But as we go forward, we also have the 60-20-20 split into vertical versus horizontal versus other models. So that's those are ways to provide returns to our shareholders. I'm always looking for, is this a good project for us from a brand perspective, from a customer perspective, and then does it provide commercial return to our shareholders?
Sure. And then lastly, any update on Origins Pune? When can we see that coming into pipeline?
This will, F25 will be launching Pune based on the latest estimates that we have. We had three issues there. One issue was about access road. We have made a strong progress in the last quarter. The second issue is contiguity. It's a Swiss cheese problem. So we are working with our partners there to make sure that the Swiss cheese problem is addressed. And then there are certain approvals that we need to, because some new rules came up with respect to afforestation, etc., that we are in the process of sorting out. So those are the three things. All of those are exciting. What's good about we call it Origins Pune OP is that it's very close to Pune. The huge amount of interest that we are already seeing about from prospective customers, prospective investors. So hopefully, as soon as we have solved all these three issues, we'll be able to get the launch done in a shortest period of time.
Got it. Thanks and all the best. That's it from my side. Thank you.
Thank you, Graham.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Ronald Siyoni from Sharekhan Limited. Please go ahead.
Yeah, good morning, sir. I had just one question with respect to Citadel Phase 2 launch. If you can touch upon how the project's response was there and versus the phase one? What kind of pricing did you see? Whether have you seen any change in the footfalls or conversion ratios? So, just on the whole Citadel phase two launch.
So let me share a few things, Ronald, and let me just keep some more excitement for our next call. The reason is very, very, very important time for us. We launched it only like 5 days back, right, 25th, and it was a metaverse and this drone show that we talked about. We have received a lot of EOI. The pricing is competitive. We have a very strong micro market understanding of who the competition is, what they offer, and how can our price value equation is going to be stronger than our competitors, given it's an extremely nice, I would say, location. And as we had done very well in phase one, I think we want to take it phase two to the next level. These are larger apartments, 3 and 4 BHKs, very well designed, I must say, and it's a premium offering that we are providing there. So the market pricing is in line with the price value equation and the competitive set that we have. The roughly, I think, close to 300 units have been launched as part of this, and we will have more open up as we see the response. But we are hoping for a super duper response from this. In the last 5 days itself, we have seen very healthy EOIs already. Let me just stop at that. Hopefully, we'll have more to share in the next call.
And on the footfall fronts, like whether footfalls have been higher than previous launches, or there has been some lower footfalls. So what kind of interest in terms of footfalls have been there?
Early days, because just one weekend we've had, that too with Cricket World Cup going on. So the footfalls are healthy. They are much stronger than what we saw in the past. This was much anticipated. But I think I care more about conversion. So I think the response from CP has been outstanding, let me tell you that. And if that is an indicator of how the pre-sales will stack out, I think we have good news in store for all of us.
Thank you very much, sir. Best of luck.
Thank you, Ronald.
Thank you. Participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to Mr. Amit Sinha for closing comments.
Very good. Thank you to everybody, all the participants. I just want to thank all of your support, listening to us, but also supporting us from outside as we build our business, as we scale our business. As I touched upon the industry, this is a purple patch for the industry. We have seen strong pre-sales momentum, more on the sustenance side. Our launches are more of the launches that we had planned are happening in the H2 of this financial year, and some of the large side launches are planned in this second half of this financial year. Our business development effort continues to be healthy, in line with our aspirations of scale up that we talked in the last quarter. ICIC business a bit subdued in H1, but it's a lumpy business. We'll see the LOI that we have, the pipeline that we have, should get converted in the H2. So hoping we have more news to share on that front. And the financials, as you know, we'll continue to work on that. You'll have the much better the financial details as we finish the financial year, given the lumpiness of this industry and the revenue recognition method that exists. Thanks a lot again for all your support, and look forward to speaking again, and best wishes to all of you for this Dussehra, Diwali, and the festivities.
Thank you, sir. On behalf of Mahindra Lifespace Developers Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.